Hey guys, this is Market Update. Things are looking very, very good for Bitcoin over the next few months potentially. This is global M2 in blue here, and the Bitcoin price very highly correlated, as you can see. So this is suggesting a big move throughout the summer up to 130, 140. That correlation is very high, so I suggest that maybe we will follow that. Now, we've had 7 green weeks. You can see these candlesticks here. It's very, very normal to get a little pullback during that, a little bit of profit taking after such a big move so quickly. What we really need to do is just turn this 100K level into support. It's been resistance and we rejected from it. If we can come into this and turn that into support and then build that base, then we can move higher. And if you look at the correlation here, it is showing potentially a little bit of a pullback over the next few weeks. So it's not one for one, but it's very highly correlated. So yeah, very confident in the Bitcoin price. We all know it's going higher anyway, right? So if you want to trade Bitcoin, go to Bybit. You can get a $30,000 deposit bonus. Whatever you deposit, they'll give you a bonus to trade with. Link below for that. And the crypto course discount expires next week. So if you type BTC at checkout, you get 20% off. I've updated the course in May. Updates for free forever for existing users. And you can see all of these videos here on just how to invest in the modern era, how to invest in crypto and make the best returns. Link below for that as well. The whole entire game of investing is keeping up with money supply growth. Currency is debt. Debt is currency. It grows over time. And so all you're trying to do by saving value that you do create is to make sure that the rate at which your assets go up is at least the same as the rate of currency debasement, and higher would be great as well, right? So the value that you save over time, you just don't want it getting debased. You don't want that value seeping away, right? You want to keep it at least or grow it. Bitcoin grows it for the time being anyway. Maybe in 100 years, it will just keep flat, which is also not a bad thing. But you see this correlation. Money supply grows. We want it to grow. Money supply, debt-based money supply is debt, right? Fiat currency, dollars, pounds, euros, anything else, that's debt. That's not an asset. It's debt, and we love debt. We want to take it out. Everyone demands debt. You want debt for your house. You want debt for your college degree. You want debt for your car. You want debt for everything. We love it, and we want more of it. The insatiable demand for debt. Now that means, because that demand for debt increases its supply, because we all demand debt, right? That increases its supply, and so you can't save in that thing. No problem. There are solutions to save the value that you have, and it's called Bitcoin or the stock market, whatever your poison is. But we know for a fact that the amount of currency supply in 10 years for dollars and pounds is going to be more than it is today. Simple. So don't save in that, save in assets. Bitcoin, I think, is the best one, but everyone is welcome to their opinion. We're going higher over time. That's the only thing. If you want to trade over the next few months, it looks like it's going higher still. So, bull market continues for BTC. Currencies expand. That's a fact. Government currencies expand. That's a fact. Here is 12-month government spending. And here is in blue the 12-month tax revenue. It is actually totally normal for the government to spend more than it takes in tax. That shouldn't be a surprise to anyone. The fact that the US runs a huge government deficit, it's actually normal. It would be completely abnormal for the government to actually run a surplus. It has happened a few times in the past, but very abnormal. No, the actual normal state of things is that the government runs a deficit. So I don't know why people shout at the void, wow, the government's running a deficit. That's like saying the sky's blue, right? It's normal. It's normal that we have deficits. Here are tax receipts to GDP. This is in the US. So tax receipts to GDP hasn't really gone anywhere over, the last 70 years, right? So the government takes around about the same as a percentage of GDP as it always has done. It's just that government spending is growing as a percent of GDP. And that, as you can see, the government creates more debt and spends that debt into the economy usually during times of crisis. So you can see the tax receipts here going down, and that's when economic activity falters. This is basically after 2008 here. So economic activity comes down, or GDP comes down. I wouldn't say economic activity because GDP is just fiat metric, but you can see GDP coming down, the government spends money to bring it back up again. You can see GDP coming down, the government spends money to bring it back up again. Money, debt creation, right? So government spending is the issue, and because they're having to spend more and more and more debt into the economy to keep GDP higher, and that's because of demographics, right? So we are inventing technologies that actually reduce the amount of effort and energy that we have to put into the economy, which is reducing prices. But of course, the debt-based system can't have that. So you have to create more debt in order to inflate the system. It's just the way it is. So is it a spending problem? Not really, actually, because it's just a very simple fact that the debt-based system needs to constantly expand prices. And so if the free market is reducing those prices, you just have to create more currency. It's not an issue, right? It just goes on and on and on and on and on. And then eventually, if enough people lose confidence in that system, you just reset the system. Usually that happens with war, which is extremely unfortunate, but that's usually how it happens. Obviously, that's the thing we all don't want. And so can you have a negotiated reset? I don't know. Anyway, it can go for way longer than we think, I mean, Japan is still, having huge amounts of debt and they're not getting out of anything, right? So it can go on for way longer than we think. And anyway, we want the system to go on, right? Because we want debt. We love it, right? Debt is the thing we demand the most. We want it. We talk about it all day long. We love debt and we want to see that system expand and continue because we all demand the debt. We love it. We want the debt. So here's the year-over-year growth of currency and debt. And here's the 0%, right? So almost never does currency actually reduce in supply because we don't want a reduction in debt. We want more debt. We want more currency over time. We demand it. And so it usually is around this kind of 5, 7, 8% level. We had a huge drawdown in the last Bitcoin bear market that drew down actual money supply, but we're back to normal. So the normal state of affairs is that the money supply grows, the government runs a deficit, and everything just goes on as normal. The normal state of affairs is that things inflate in price if you measure them in debt, and that's because we create so much debt. It's created because we want it. We create it. We have created debt. Debt doesn't exist in nature. There is no debt in nature, right? It's hand to mouth, day to day. We create debt, we love debt, and we don't want it to go away. And so if you measure the price of stuff in debt, then it looks like everything's going up in price. But the reality is, in your savings, if you're saving in the S&P or the NASDAQ or Bitcoin or your house, the price of things isn't really going up in those when measured in those things, right? Because the price of things doesn't actually go up. It should actually come down over time as we become more adept at making things. But if you're measuring the price of stuff in fiat currency, then it looks like everything's going up in price, but it isn't really. In any case, what is normal is that the price of things valued in the fiat currency goes up. And so inflation is required and necessary. Everyone that has debt, which is pretty much everyone at some point in their lives, actually wants prices to inflate. Because if you have debt and the price of things goes down, your debt becomes more expensive in relation to the price level of the economy. We actually want inflation, right? And we want a little bit of inflation, not too much because then we can't really handle our debts and then things become a little bit unpredictable and we don't know how to price our goods and services. But we want debt. We want debt. We want inflation. We want to make sure that inflation is within a band of, let's say 5 to 10% in the dollar, a lot more in other currencies. But all of this is actually what we want. I think a lot of the discourse paints this out as this bad thing that exists and that we should actually try and reduce. No, that's not actually what's happening here. We want inflation as a society. We want debt as a society. We want these things, and that's why they exist. If we, as humanity, didn't want this, it wouldn't happen because this is our creation. So inflation, as you can see in financial conditions, very, very correlated. We are going to get an expansion in both inflation and financial conditions here, which is good for the Bitcoin price. Inflation and debasement in fiat currencies is fantastic for the Bitcoin price when valuing it in those fiat currencies. But it's irrelevant anyway. What you need to do is value the things that you actually want to buy in the Bitcoin over time. iPhones, cars, houses, whatever. They're all collapsing versus BTC. And that's because BTC is money. And those things should actually be ultimately abundant over time because we can make them. We can make as many of those things as we want. So inflation is necessary. Inflation is desired by everyone with debt because the inflation makes your debt cheaper over time. We want inflation and it will continue to happen. This is Bitcoin index performance valued in debt currency units. Of course, it's going to go up in price over time. And this cycle is actually doing great as well and very, very similar to previous cycles of our debt-based cycle, which is about every 4 years. We love debt. We want more of it and we want this cycle to continue. So maybe we have another 6, 8, 12 months of this cycle continuing. I think we do go a lot higher as well. But of course, in the future, way higher than we are now. Strategy, a Bitcoin treasury company, is not replacing the dollar. Bitcoin is an asset and it's not debt. We love debt, and we want more of it. Strategy, a Bitcoin company, is entrenching the debt-based dollar system even more. You have Bitcoin, which is an asset, and what Strategy are doing is entrenching the dollar. They're actually creating dollar liabilities for themselves, which increases demand for dollars because they have dollar liabilities. They need to chase dollars. They need abundant dollars in the system. They need inflation. They need creation of money. They need that. They're entrenching the debt system. We love it. We love nothing more than Bitcoin, apart from one thing, which is debt. They're taking debt in dollars to buy the Bitcoin. Debt is our creation. It will never go away. We love it. And it's going to get bigger and bigger and bigger. The amount of debt is just going to continue, which is what we want. Strategy, are entrenching the dollar system, not replacing it with Bitcoin. They're actually creating that liability for themselves, which is just perpetuating these debt-based cycles because they have dollar liabilities, which means they are now part of the dollar liability system. They demand currency units. And so when the dollar strengthens and Bitcoin comes down, they may actually demand those currency units more, and the cycle continues. The cycle of debt that we create and we love and we want, the cycle of assets. Of course, over time, we all want this debasement because it makes our debt cheaper. But Strategy, specifically a Bitcoin company, are entrenching the dollar system and making it stronger and stronger and stronger. And that's because that's what we do. We love debt. There's nothing more that we want than debt itself. And they're making it stronger, and it will continue to get stronger. So money will not be replaced. The dollar will get absolutely stronger. And all of these Bitcoin companies are taking debt out now and entrenching their demand for dollars over time, which means we want more dollars in society. We want more GDP growth funded by commercial banks creating money. And that is going to push for debasement of fiat currency. It's also going to push up the price of Bitcoin valued in that fiat currency. But all of that is irrelevant anyway. You need to make sure that the assets that you save in buy more of the things that you actually want to buy over time. Costco first quarter revenues, that's a 10% annualized growth rate over the last 30 years. But the currency debases by 7 to 10% a year anyway. So if the currency is debasing 7 to 10% a year, and that's normal and expected, and that will continue, and the company's revenues are growing 7 to 10% a year, then the company isn't actually growing its revenue, is it? Maybe we can be kind and say the debasement rate for dollars is, let's say, 7 or 8%, and so Costco is growing their business actually in real terms maybe 2% a year, which at 2% is not a lot, right? But hey, it's better than nothing. Great business, 2% a year for a big business is actually pretty good. The biggest mistake we all make is thinking that the level from comparison starts at 0, and that's not it. The currency debases by, let's say, 10% a year, so 10% is the rate at which you have to start comparing. Any investment that makes under 10%, you're actually losing money, and 10% is the comparison starting point. Anything that makes more than that, you're actually making money minus that 10%. If Bitcoin goes up 25 or 30% a year, you're looking at a 20, something like that, 15, 20% actual real return, which is insane in terms of the returns there versus most other companies. If you trade Bitcoin, you can get a $30,000 deposit bonus on Bybit down below. And also the Crypto Investor course, the code BTC, you can use that for 20% off, runs out next week, link below as well. I'm James, it's ManZG. Cheers for watching, and I'll see you in the next one.